Ladies and gentlemen, today's update is about perspective timing, understanding what is actually unfolding behind the headlines as fresh Iraqi dinar intel circulates across the market. When we talk about the big picture, it's important to step back from day-to-day speculation and focus on confirmed developments shaping the monetary reform narrative. Over the past several weeks, statements from Prime Minister Mohammed Shia al-Sudani and Central Bank of Iraq Governor Ali al-Alak have continued to emphasize stability, transparency, and confidence in Iraq's financial system. These are not casual remarks. They are part of a broader effort to signal control over monetary policy, currency, circulation, and banking reform, particularly as the CBI tightens oversight of the exchange rate mechanism and strengthens compliance with international standards. We are also seeing meaningful movement in how the dinar is being managed domestically. The official exchange rate has remained stable, while parallel market pressures have eased compared to earlier volatility. That tells us demand is becoming more orderly, and that confidence inside Iraq is improving. Reports of exchange centers resuming or expanding operations should be viewed through this lens, not as a trigger event, but as infrastructure preparation that supports accessibility and liquidity within a regulated framework. When investors ask about RV and timing windows, the most responsible answer is that monetary reform is a process, not a single moment. Iraq continues to modernize its banking sector, integrate digital payment systems, and align fiscal policy with oil revenue management. These are prerequisites for any meaningful adjustment in currency valuation, and they are progressing steadily rather than dramatically. Globally, Iraq is also benefiting from clearer economic signals. Energy markets remain supportive, foreign reserves are solid, and diplomatic engagement has improved. Together, these factors contribute to political and financial stability, which is what long-term investors watch most closely. So what's next is not a surprise announcement, but continued alignment. The direction is deliberate, the signals are consistent, and sentiment around the Iraqi dinar reflects cautious optimism rooted in structure. It's not speculation. Monetary reform in Iraq continues to advance through measured institutional steps, rather than abrupt policy shifts, and this is a critical distinction for understanding the current environment. The Central Bank of Iraq has maintained a consistent message around strengthening the integrity of the financial system, focusing on transparency, compliance, and long-term sustainability. This approach reflects a deliberate effort to move away from legacy practices that contributed to volatility and toward a framework aligned with international banking norms. The emphasis on institutional stability is not symbolic. It is being reinforced through regulatory updates, improved oversight of financial institutions, and tighter controls over currency flows. A key component of this reform process has been the modernization of Iraq's banking infrastructure. The expansion of electronic payment systems, salary digitization, and reduced reliance on cash transactions are all signs of a maturing financial ecosystem. These measures increase traceability, reduce fraud, support the central bank's ability to manage liquidity effectively. At the same time, the government has been working in coordination with the central bank to ensure fiscal discipline, particularly in managing oil revenues and public expenditures, which directly impacts currency confidence. Institutional stability is also being strengthened through Iraq's engagement with international financial bodies and correspondent banks. Enhanced compliance with anti-money laundering and counterterrorism financing standards has improved Iraq's credibility in global markets. This has a stabilizing effect on the dinar by reducing external pressure and restoring trust among foreign stakeholders. The result is a more predictable monetary environment, which is essential for any future recalibration of currency policy. Politically, the current administration has prioritized economic continuity over disruption, signaling a commitment to protecting the reform trajectory. This consistency reduces policy risk and reassures both domestic and foreign participants that monetary reform will not be derailed by short-term political dynamics. Investor sentiment tends to respond positively to this kind of predictability, especially in emerging markets where institutional trust is still being rebuilt. taken. Together, these developments point to a reform process rooted in structure rather than speculation. The focus remains on building durable systems, reinforcing governance, and ensuring that any future currency-related decisions are supported by a stable institutional foundation rather than external pressure or market. Exchange rate control in Iraq has increasingly shifted from reactive intervention to managed normalization, reflecting a more disciplined monetary environment. The Central Bank of Iraq has worked steadily to narrow the gap between the official exchange rate and parallel market pricing, using policy tools that emphasize regulation rather than force. By tightening oversight of currency auctions, enforcing documentation requirements, and restricting illicit dollar outflows, the CBI has been able to reduce speculative pressure that previously distorted the market. These steps have contributed to greater predictability in daily rate movements and reduced volatility, which is a core objective of any credible monetary authority. Regulated market normalization is also visible in the restructuring of licensed exchange centers and banks. Compliance standards have been raised, and institutions that fail to meet reporting or transparency requirements face suspension or exclusion. This has reduced the influence of unregulated actors and increased confidence. In official channels, as licensed exchange centers resume operations under stricter guidelines, liquidity is being restored in a controlled manner, allowing supply and demand to function within an accountable framework. This process supports price discovery without allowing the kind of unchecked fluctuations that undermine public trust. Another important factor in exchange rate control has been the coordination between fiscal and monetary policy. Government spending discipline, particularly around payroll and imports, has helped stabilize demand for foreign currency. When public finances are managed responsibly, pressure on the dinar eases, making it easier for the central bank to maintain rate stability. This coordination sends a signal to markets that currency management is not isolated policy, but part of a broader economic strategy. Regional and international dynamics also play a role in normalization. Improved compliance with international transfer protocols has reduced delays and uncertainty in cross-border transactions. As correspondent banking relationships strengthen, legitimate trade flows face fewer obstacles, decreasing reliance on informal channels that historically inflated parallel market rates. This improves transparency and reinforces confidence in the official exchange mechanism. Public behavior is another indicator of normalization. As confidence in the official rate improves, households and businesses are less inclined to hoard foreign currency or rush to informal markets. This behavioral shift is gradual but meaningful, as trust in the system is essential for sustained exchange rate control. Over time, these conditions create a more resilient market structure, where the dinar's value reflects policy discipline and economic fundamentals rather than short-term speculation. Investor optimism surrounding the Iraqi dinar has become increasingly cautious and measured, shaped more by timing considerations and external economic signals than by speculative narratives. This shift reflects a maturing outlook among market participants who are paying closer attention to structural indicators rather than isolated news events. Investors are monitoring how Iraq positions itself within the global financial system, particularly as international markets remain sensitive to inflation trends, interest rate policy, and geopolitical stability. These global factors influence capital flows and risk appetite, which in turn affect emerging market currencies like the dinar. Timing remains a central theme in investor sentiment, but it is now viewed through a longer-term lens. Rather than anticipating sudden moves, investors are assessing whether Iraq's economic signals align with sustainable reform. Strong foreign currency reserves, consistent oil export revenues, and improving trade settlement mechanisms contribute to confidence, but they are weighed against regional uncertainties and global demand fluctuations. This balance creates a sentiment that is optimistic yet restrained, where expectations are tempered by realism. Global economic signals also provide important context. As major central banks navigate interest rate cycles, liquidity conditions tighten or loosen across markets. For Iraq, stable oil pricing and predictable export volumes help buffer against external shocks, reinforcing the perception of resilience. Investors interpret this stability as a supportive backdrop for gradual currency strengthening, provided domestic reforms continue to progress without disruption. Political continuity and security conditions further influence sentiment. Investors closely watch governance signals, legislative cooperation, and budget execution, as these factors affect economic planning and fiscal reliability. When political messaging emphasizes stability and reform continuity, it reduces perceived risk and supports patient capital. Conversely, uncertainty can delay engagement, even if economic fundamentals remain sound. Another layer of sentiment comes from infrastructure. Readiness, including banking access, exchange mechanisms, and payment modernization. Investors understand that timing is not driven by announcements, but by readiness. As systems become more integrated and compliant, confidence builds incrementally. This type of optimism is not driven by emotion, but by alignment between global conditions and domestic preparation, where progress is measured in consistency rather than speed. As these elements continue to align, the overall outlook remains grounded in patience and observation rather than anticipation of sudden change. The trajectory of the Iraqi dinar is being shaped by disciplined policy, external conditions, and investor awareness that timing follows readiness. What matters most now is continuity and reform, consistency in signals, and stability across both domestic and global environments. As these factors collectively determine how confidence evolves and how future monetary decisions are ultimately positioned,